Today, crypto prices tumble after the Fed forecasts more interest rate hikes in 2023. An FTX top executive tipped off investigators ahead of the company's bankruptcy. And Dan Ashmore of CoinJournal tracks where crypto investors are moving their funds as trust in the industry collapses. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Cryptocurrency prices taking a hit after the Federal Reserve raised rates by half a percentage point yesterday. Bitcoin dropped back below $18,000, Ether fell to $1,200, and Matic sank to 88 cents. Investors on Wall Street and in crypto are bracing for more rate hikes in the new year as the Fed continues its efforts to fight inflation. At the same time, fears of a recession are rising once again. New economic data that tracks consumer spending showed sales were slowing faster than Wall Street expected in November. Shoppers are spending less, and that could spell bad news for the economy if it continues. All right, let's talk about the top stories in crypto. First, Ryan Salem, who was co-CEO at FTX, told Bahamian officials that SBF may have committed fraud days before the company filed for bankruptcy. In a filing tied to the company's bankruptcy, Salem disclosed possible mishandling of clients' assets. That disclosure was sent to Bahamian police from the nation's Securities Commission and was dated November 9th. FTX declared bankruptcy just 2 days later. Salem also disclosed that only 3 people would have had the ability to engineer the transfers: SBF himself, Nishad Singh, the company's director of engineering, and Gary Wang, co-founder and chief technology officer. Next, Binance CEO Changpeng Zhao is shrugging off concerns that officials could claw back billions in FTX investments. CNBC's Squawk Box pressed him today on whether, if ordered by the court, the company could return $2.1 billion it got in 2019 after it exited its Series A investment in FTX.
So if you had to send a check in US dollars for $2.1 billion, could you?
So I think we'll leave that to the lawyers. I think our legal team is perfectly capable of handling it. My expectation, though, just from common logic, is that there was a lot of spendings after that transaction in the more recent times. FTX done to football stadiums, referees, sponsorships, even to Calvin himself.
But would you be able to handle it if somebody asked you for $2.1 billion back? Would that be okay? Would you be able to still withstand things?
We're financially okay.
Including you have $2.1 billion to give away. If somebody came to claw that back, you'd still be fine?
We'll let the lawyers handle it. We are financially strong.
CZ said the company took the payment in a number of tokens, including FTT. That crypto token, of course, plummeted in value after the exchange's collapse. CZ said the FTT payout was significant, but that the company had forgotten about it. And finally, troubled Bitcoin miner Core Scientific may have found new funding to avoid bankruptcy. B. Riley, one of the firm's largest lenders, released an open letter to Core Scientific saying that bankruptcy is not necessary at all and offering the firm up to $72 million in new funding. B. Riley said the loan would be on favorable terms to give the miner 2 years to find a path to profitability. Core Scientific warned earlier this year that it could resort to bankruptcy as losses mount, and it's not the only Bitcoin miner in trouble. Firms around the globe are struggling as Bitcoin prices hover near rock bottom for the year, and at the same time, operational costs remain sky high. All right, on to our main story. Crypto World's Talia Kaplan spoke to Dan Ashmore, a crypto analyst at CoinJournal, about where investors are moving their funds amid continued industry uncertainty after FTX's bankruptcy.
So the fall of FTX shocked the industry, and now that the company's founder, Sam Bankman-Fried, has been arrested and charged, we're learning more about what allegedly took place behind the scenes. Now, of course, all of this is having an impact on the crypto space, and you found, by looking on-chain, that Bitcoin flow out of exchanges is happening at an unprecedented speed right now. What do you attribute this to? Is it the lack of trust and confidence in crypto exchanges that has developed post-FTX collapse?
Yeah, in a short sentence, that's exactly what it is. There's extreme fear in the markets right now. And FTX was tier 1. It was like as sacred as you could get in the crypto space. You know, the CEO, Sam Bankman-Fried, was on Forbes magazine covers. He was testifying before Congress. It really was the shock of all shocks. So there's just mass contagion and panic has flooded through the market. And then just in the last week now, we've seen some stories come out about Binance as well, which is they've now have a colossal market share. Like they're the complete dominant number one. And that's almost like the straw that broke the camel's back. And it's just max fear.
So what do you think it will take to restore the trust that has been lost? There is now a focus on proof of reserves. Several exchanges, including Binance, as you mentioned, have recently announced plans to use this auditing technique to try to reassure customers following the collapse of FTX, although there is some skepticism about the use of proof of reserves to paint the full picture and safeguard user money. So what are your thoughts? Do you think these reserve audits can avoid another FTX-like moment?
I think the way forward is to do these audits correctly. But what's causing a lot of trouble right now is this proof of reserves report that you're talking about. It is not actually an audit. It's far from a formal audit. Like, accountants are almost scoffing at it. It's very difficult to get any sort of intel on the liabilities. So they've presented the asset side of their business, but it's still done in an extremely opaque manner. And it's almost impossible to make any sort of financial assessment of the entire company. This is Binance I'm talking about specifically. And then when you throw in the fact that, there's no formal headquarters, it's been going under a corporate restructuring for the last 18 months. There's just a lot of uncertainty here. And given Binance is now the number one exchange on what just happened, FTX being so fresh in the minds of cryptocurrency investors, that it's just causing all kinds of chaos, and just funds are being withdrawn left, right, and center. But to get back to your question about what will solve this, I think if Binance they say that they're working towards a full audit. If they can do that, that's fantastic, and that's exactly what the space needs. But it will take time. The FTX collapse is only the latest crash this year. The latest scandals hit the space, and like I keep saying, fear and panic is at an all-time high.
So Dave Ripley, the incoming CEO of the crypto exchange Kraken, spoke with us yesterday, outlining what he thinks are the key components to proof of reserves, including looking at both assets and liabilities, as well as the involvement of a third-party auditor. Do you think this will help restore confidence?
Yes, absolutely. If done correctly, I think that's exactly what the space needs. But a lot of these companies, they're very opaque, and just they're not coming anywhere near to what would be described as a full audit in traditional finance circles. Cryptocurrency has sprung up from almost nothing over the last 10 years, and these exchanges have grown at a ridiculous pace. FTX was only founded a few years ago. Binance, the same. Like, they've really grown to just absolute behemoths in the industry, but a lot of them just don't have the disclosures, don't have the internal controls, and don't have the transparency that the space needs right now.
So where do you think we go from here? What is your outlook for the industry in 2023, and how does it overcome what transpired in recent months?
It's a very good question. And there's no doubt that sentiment is extremely low now. I would say as low as it's ever been in the cryptocurrency industry. The problem is that it's fighting two battles. You've got the first battle, which is the wider macro climate. We're obviously seeing pullbacks across the board. We're seeing a high inflation. We're in a high interest rate paradigm right now. And this is actually the first time in cryptocurrency's existence that it's ever experienced a climate like this. Like, we can't forget that Bitcoin was only launched in 2009, which was the aftermath of the great financial crash. And since then, it's been almost an unprecedented bull market. The S&P 500 did 7x from its lows then to its peak last year. So Bitcoin has only ever existed, and cryptocurrency, in this basement level interest rate, this free money environment, which is now completely flipped. We are now in a high interest rate environment. We've got inflation. We've got recessions on the horizon, possibly in a lot of nations. And Bitcoin is a high risk asset. So, or it has been trading like a high risk asset today. So it's really suffering. That's the first battle. And the second battle it's fighting is the idiosyncratic risk within the industry, which is, like we're discussing now, all these scandals. You see the Terra crash, you see Celsius, now you've got FTX. So what I think is the biggest problem here is the reputational damage, because I think that is going to affect institutional adoption. Institutions aren't going to be as willing to go in. I think it's such a high profile, almost embarrassment for the industry, that I think going forward, it's going to take a long time to restore that trust. But I really think that, the reputational damage is probably the most concerning. I do think it will recover in the long term, but that won't be anytime soon.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, so we'll see you then.